Hi guys, welcome back. How are you doing? How was these last couple of weeks? I've seen you grow so much in this mastery. Do you remember we have actually started our journey with talking about psychology, with not making any changes at all. We started talking about our emotions, we started listening to the little devil and the little angel. And then slowly we started talking about the trading industry and all these stimuli that we were all constantly having from the trading industry telling us, oh, this is the last hottest thing, oh, do this, do that, follow this, include this indicator, include this specific ICT concept. And I told you guys, if you were unprofitable so far, it's not your fault. It's the trading industry. They want to make things more complicated, they want to make things much more overwhelming for us than they actually need to be for us to be profitable. Trading can be easy. Trading can be effortless. Trading can be boring for you and still bring you amazing profitability and amazing results. So while we were listening to the little devil and the little angel and listening to our internal dialogue that regarded trading for the first time, we took holidays. We took holidays from our past unprofitable trading behaviors. And we decided not to look at the charts, not to look at any videos, to just focus on ourselves, to relax, to take time with our family, with our friends, with our work, and with everything that we were doing before. You know, guys, for many of us, trading is truly a deep desire that comes from the bottom of our hearts. And even if sometimes we say we are doing it for our husband, for our wife, for our family, to have freedom, to have this, to have that, we are doing it because deep down we really desire to be profitable traders. And we are doing it for ourselves. And that's totally fine. Many of you started this journey and we talked heavily about what it means being unprofitable. What are some characteristics of unprofitable traders? How do they behave on a daily basis? And we have seen that some of the characteristics of unprofitable traders is entry trades with being too emotional, with not listening to our psychology, not looking at our strategy, not following our trading plan, and so many other things. There is one thing that we didn't touch upon, which I wanted to leave especially for the end of this mastery, and that is, guys, unprofitable traders enter way too many trades. Profitable traders. I have a friend, she's actually a very famous YouTuber, very famous trader, and she enters trade twice, three times in a month. Sometimes once a month she would trade. The other times she would look at the charts on the right time frame on her own times when she's supposed to be trading, but if there is something that bothers her for whatever reason, she will not enter a trade. But when she enters a trade, she risks big. She risks a little bit bigger than, for example, I would be used to do right now and what I would be comfortable with doing right now. And it's totally okay. We need to transition into trading less but taking higher quality trades. I have one of you, she did her backtesting for 3 months, and in 3 months she entered 10 trades. 10 in 3 months. That's actually not that many trades a month per se. And of these 10 trades, 6 were profitable and 4 were unprofitable trades. And it's totally fine. But she entered when she felt comfortable entering a trade. And remember, guys, there are people that are comfortable in taking 3 trades a week, and it totally fits them, and that's their own way of trading. And then there are traders that will want to enter once, twice, 3 times a month, and that's totally fine. You need to find what works for you best. Entering more trades doesn't mean being more profitable. I told you at the beginning, unprofitable traders very often enter so many trades, and that brings them confusion, that brings them then, also a negative feedback loop that you get from your trades, and then turns out to be like a confidence killer, and then next time you're in front of the charts, it kind of like makes you feel a little bit like not sure what you're doing, and so on and so forth. When you're a profitable trader, you enter when you want to enter because you have the freedom to do what you want to do. Guys, I really don't know if you remember, but I made you one promise at the beginning of this mastery. I didn't promise you specifically that you're going to be a profitable trader. I said that I'm going to do everything I can to give you the tools to become one, but it's still your choice. What I could promise you 100% at the end of this mastery is that you're going to have the freedom to choose who you want to be. If you want to become a profitable, professional trader, then you have the choice to do so right now. And now you also have the choice to go back to your old habits, to your old routines. This also means choosing your own identity, choosing the person that you want to be. Do you want to become a profitable professional trader that trades boringly but makes a lot of profit? Or do you want to keep entering exciting trades when you think your intuition is telling you something and then maybe be unprofitable? That's all up to you. But I know now that you have a choice. You have a choice in front of yourself. I want to tell you something else about profitable traders. Yes, because profitable traders have characteristics that unprofitable traders don't have. Profitable traders have different setups, and by having different setups with the same strategy or maybe with maximum two strategies means that they're gonna give different risk settings to different setups. What do I mean by that? Well, to explain you more in detail, let's jump up on my computer. Let me show you a couple of things. Many traders are asking, and will always going to be asking, what should my risk be? How should I set up my risk to be? What risk setting should I choose? Should I have a risk setting that is zero point 0.5? Should I have a risk setting that is 2%? And so they keep asking, what should my risk be? And this is really funny because when, as we have done throughout this mastery, we really focus on this question, what should be my risk? We understand right away that this question is wrong, is the wrong question to be asking. And this is the wrong question to be asking for so many different reasons. And when you ask, what should my risk be? You are giving for granted that your risk need to be zero point 0.5 or 1% or 2%. But actually, guys, when we actually focus on this question, right away we understand that the right question to be asking should be, when do I set my risk to be zero point 0.5? When do I set my risk to be 2%, for example? And so this is the right question. The right question is, when do I set my risk to be zero point 0.5? And when do I actually increase my risk? And the best answer to these questions are actually trading setups. And trading setups come from strategy. So, first and foremost, we have the strategy, and then from this strategy, we derive our trading setups. And from the trading setups, then we can know much better what is our risk setting. Remember, guys, the question is not what my risk setting should be, but when should I set my risk to be zero point 0.5 and when should I set my risk to be, for example, 2%. And to know more about that and about risk settings, we need to go back to our trading setups, which are derived from our strategy. And I'm really, really excited because I love trading setups. This is something that I have discovered at the beginning of my trading journey, but it actually never made sense to me until I really learned how to trade, until I really learned and master my strategy. And so, guys, let's start talking about trading setup. But what is a trading setup? Well, a trading setup is a series of checks that we need in order to take a trade. A trading setup is not a strategy, okay? The strategy is omnicomprehensive and it explains you why and it sets you the step by step. That's not a setup. One strategy can have several setups. Okay, this is important. So, with only one strategy, you can have different trading setups. Okay, let's dive deep into trading setups. You need to know, first and foremost, that you should make your own setups according to your own character and to the traits that come more natural to you. The better is your setup, the higher should be the risk that you're willing to take. And so, looking at your winning trades, at what they all have in common, you can use all of those winning trades to make actually your best setups. What follows and what I'm going to show you here and is an example of my own setups that you can try on. But it doesn't mean that they're going to work for you as well as they work for me. So just keep that in mind. So trading setups should be set according to your character, according to the trades, to the winning trades that come most natural to you. And better is your setup, higher is the risk that you can take. You should be looking at your winning trades and from those derive your winning setups. And so, guys, let's start talking about it a little bit more in details. So, we have a strategy and we have a setup. We said that the strategy is how the price needs to move for me to enter a trade. So, the strategy tells me, okay, I'm entering this trade. The setup instead is telling me what I need to see in order for me to risk more. Okay, strategy, how the price needs to move for me to enter a trade, set up what I need to see to take a higher risk. And so, always and forever, we're gonna go from the strategy to the setup, from the strategy to the setup. And so, let's start from our strategy. I'm going to show you here the step by step of our strategy. And please bear here with me for a moment. We need to read it through once more. So, our strategy says to first find our daily bias. Look at the chart at the right time of the day. Observe our chart on the 1 hour time frame first. Find the liquidity levels and the fair value gaps. Observe the chart on the 15 minutes time frame, and here find again the liquidity levels and the fair value gaps. At the right time, we're going to wait for the price to take out a previous liquidity level. Number 7, when that happens, we're going to go on the 5 minutes time frame. Then we're going to wait for the price to reverse, and so to go in the opposite direction. Then in that same movement, we're looking at the price to take out a previous level, which can be a low or a high. In that same movement, we also want to be looking at the price to create a new fair value gap. In that same movement, we're going to be looking at the price to show a big displacement. And now, before entering a trade, we're going to stop a moment, do our checks, and decide if this is actually the right moment to enter. And when the price steps back into the fair value gap, this is going to be our entry. So this, guys, is our strategy. This is our step-by-step strategy. I know that we missed the entry here, but I just wanted for us to focus on all of these different points. And so now that we have a strategy, our question that regards the setup is, what would convince me to risk more? What do I need to see in the price movements for me to be risking more of my capital? Because remember, we have said it at the beginning, capital preservation is key. And so, what do I need to see to convince me to risk more? Well, we've just seen the strategy. I'm going to show you my best setup. And so, my setup goes as follows. I'm going to risk more when I see the following. When I see that my monthly bias is aligned with my trade, when I see that my weekly bias is aligned with my trade, when I see that my daily bias is aligned with my trade, when there are no red news at all that day, when that's not a Monday, so I'm trading, but this is not a Monday, when the liquidity taken out is the liquidity on the daily. And so we have seen here before, guys, when we were talking about the liquidity level being taken out, when we have the right PD array, which can be a premium or a discount. And so, for example, when we are in premium, but we are looking for the price and the trade to go lower, so we are bearish. And when we are in discount right now, but we are actually believing that the price is going to go higher, that's going to be an additional confirmation. When in point 9, and so when we said in that same movement, we're looking at the price to take out a previous level, when that level is not made of 2 or more equal lows or highs, but it's actually only one level. So I, for example, have only one low or I have only one high and not two highs or two lows. And that's due to the strength of the movement and to the velocity with which the price is forming certain movements. I have noticed that when I have in point 0.9, instead of only one low, one high, two equal lows or two equal highs, it's more likely that the price is going to be doing something that I don't want it to be doing. And so that's something that I want to keep paying attention to. Then, if fair value gaps, and I see fair value gaps on both the 3 minutes time frame but also the 5 minutes time frame, and so when these two time frames are aligned, when I have a risk to reward higher than 2, and when I myself am in a great emotional and psychological state. This is very important, and I really wanted to add it to my own setup because there are days in which I see everything looking good. Sometimes, it's life. It happens that you're not at your best emotionally or psychologically. This is a moment in which, if I see everything, but I'm still not at my best, and I still will not be risking more. So, this is very important. And so, if I see all of these confirmations or of these additional checks on my strategy, in this case, I'm going to be risking 2% of my capital. So I'm willing to allocate a higher risk percentage because I truly believe that the trade is going to do what I want it to be doing. If, for example, I don't see every single one of these confirmations, but I, for example, see the daily bias is aligned with my trade, there are no red news that day, the liquidity taken out is indeed the liquidity on the daily. We are looking at the right PDL race. So, for example, I'm in premium, but I know that the price is going to go into the opposite direction. If in point number 9, I don't have equal lows broken, but only one level, when the fair value gap is still shown on the 3 minutes and the 5 minutes, and those are aligned, when the risk to reward is higher than 2, and when I'm in a great emotional and psychological state, then I'm going to be risking 1.5% of my capital. When instead I have even less confirmations and I have even less checks on my setup. So, for example, it is a no red news day, the liquidity taken out is still the liquidity on the daily. In point number 9, there are no equal levels being broken, but only one level. When the R&R is higher than 2, and when still I'm in a great psychological and emotional state, then I'm going to be risking 1% of my capital. When instead, guys, none of those setups that I have chosen for myself are there, but still the price is following my strategy. I can see it, for example, taking a previous liquidity level, go on a 5 minutes time frame. I see that the price is reversing, is taking out another level, so it's going lower to take out a previous low, or is the price is going now higher to take out a previous high, and so on and so forth. When the movements that we are looking create a new fair value gap, then when there is a big displacement and I do not find very, very strict and good reasons not to enter a trade, then I'm still going to be trading that day, I'm still going to be trading. And in this case, I'm going to be allocating a 0.5% risk. Yes, because it's true, not always all of the stars align, and we should not always be waiting for every single thing to go our way to take a trade. Sometimes it's okay, it's totally fine to take a trade that doesn't have additional confirmations. And so our strategy is safe, is sound, it's our step by step to follow, and it's the right one. And when we do not have additional confirmation, it's totally fine to enter with a risk that's equal to 0.5. When we have some additional confirmations in our setup, such as these ones that I'm showing you here, I will personally risk 1% of my capital instead of risking 0.5. So as you can see here I have no additional confirmations in my setup. I'm still entering the trade, risk is 0.5. When I have additional confirmations that tell me, okay, maybe I could trust these price movements a little bit more, I'm going to be risking 1%. When I have even more confirmations, I'm going to be risking 1.5%. And when I actually have all of the confirmations, the stars are aligned, and the price is doing exactly what I want it to be doing, I'm going to allow myself to risk 2% of my capital. Now, guys, You do not need to understand every single thing that regards my setup to still be able to do and use your own setup. Our aim is to maximize our profits while we are minimizing our losses. And so we want to risk more when we are extra certain that we will make money. And we want to be risking less when we could still take a loss. And so, with this aim in mind, to actually maximize our profits and minimize our losses, our risk setting should always keep in mind the following rules. Do not go higher than 2% risk. It is not worth it. We are not gambling, we are investing profitably. Remember, we are profitable professional traders and we're not here to play, but we are actually there to make money, to have a return on our investments. Play with your risk setting only when you have mastered the strategy. And so, when you have done your backtesting, your demo trading, when you're confident about your strategy, then start playing with risk. Until that moment, keep your risk setting straight at, for example, 0.5%. Learning a strategy profitably is already difficult. If on that you even put, okay, should I risk more, should I not, and so on and so forth, when the strategy is not flowing so naturally for you yet, this is a recipe for disaster. Do one thing at a time, master it, and then keep on going and really try to maximize your profits. You should be making your own setups based on your backtesting and your demo trading winning trades. So I really want you to always screenshot them, to have them there, to have a screenshot before the trade, when you enter the trade, and after the trade is closed. This is the best way in which you can analyze them. Keep going, guys. And now let's go back to the video. Guys, having different setups means multiplying your profits, means multiplying your wins, means growing as a person and growing as a trader, expanding your profits. And I would love that for you. The difference between a trader that makes 1,000, 2,000, 3,000, 10,000, maybe even 20,000 K a month and a trader that makes $1 million or more a month is risk setups. Giving different and assigning different risks to different trades depending if our setup is there and what are the characteristics of this specific setup. Remember, you do not need to know all of your different setups and risk setups when you're just passing a prop firm challenge, but for sure it's going to help you. Take your time to master different setups. Take your time to master different risks. And now, guys, I'm so happy because you know how to do it. You know that first you need to backtest and then you need to demo trade live markets. Not with your funds, okay? Not with somebody else's funds. Demo trading live. Gaining confidence, learning about your processes, and then implementing that and testing again and implementing little changes that can make your life so much more profitable. But guys, I think it's time. I think it's time for us to talk about a prop firm challenge. Yes, because now that the mastery is over, I know, guys, I know that you're ready to take a prop firm challenge, and that makes me just so happy. Many of you would ask me, okay, Avi, when is it time for me to take a prop firm challenge? When would I know that I'm ready to take a prop firm challenge? I can tell you this. You're ready to take a prop firm challenge when you're making your trading boring enough that is so repeatable and it becomes second nature to you and it's easy. We have so far backtested 3 months. I would advise you to take a prop firm challenge after you have backtested at least 1 year of data. That should give you enough confidence, enough feeling good when you're placing your trades, enough natural and easy. Just click entering a trade, yes, I know what I'm doing, to be able then to transition to demo live trading, just to get back yet again for maybe a couple of weeks on how does it look like on live markets, and then it's time to go for a prop firm challenge. Now, I want to tell you some secrets that regard prop firm challenges. And those are things that still today when I think about them, just like blow my mind. But there have been so useful for me to restructure my own thinking about prop firm challenges. What if passing a funded challenge for me was easy? What if it was easy for me to pass a funded challenge? How would that look like? We know that our psychology leads to our strategy and that our strategy leads to our execution. And so let's talk a moment about challenges, funded challenges, and how to pass them. Well, guys, I want to reveal you the secrets to passing a founded challenge easily. Yes, guys, because there are secrets, things that traders always mention, always talk about in one way, in a positive way, because they have passed a challenge and they have kept their money. And then there are ways in which traders try to pass a challenge but actually don't. But I keep referring to these three secrets over and over and over again. And I'm sure that once you really think about it for a second, once you focus on these three secrets for a moment, your mind and your brain is going to open up to the idea that you can really pass a founded challenge easily. And so let's go. Let's start with these secrets. Secret number one that I want to reveal you is that everyone can do it. Every single person on this planet can pass a founded challenge. But not everyone can make it so boring to keep being consistent after passing the challenge. And that happens because traders get excited to make profits, get excited to make money. And this is how very often traders ruin it all. Yes, guys, because everyone can do it. Everyone has the capacity to sit down in front of the computer and pass a funded challenge when they have a good strategy, when they have actually trained for it. But very often, our little devil and our little angel starts to fight when we are in front of the charts because they think, oh my God, now I'm not just demo trading, I'm not just back testing. Now I'm actually trading to make money, and they get excited. They get excited to make profits, they get excited to make money, and that influences their capacity to stay consistent. I would like you to expect to be easily profitable. When it's exciting, then stop trading. When you find it exciting, oh my God, I'm doing a challenge. This is amazing. I already am half the way to get the money. Is it exciting, guys? Stop trading. Stop trading. You can be profitable easily, and that is natural to you at this point. But if you are too excited, then stop trading. You're able to step back and choose freely for yourself when it's time to trade and when it's not. If you get too excited, stop trading and go back to the process. Go back to the step by step. Do not show your results around. Keep your results for yourself. Do not even accept praise. Focus on what you need to be doing. And you need to make trading boring. Everyone can do it because traders get excited. Sometimes they ruin it all and they cannot keep themselves being consistent. But if you go back to your roots, go back to the process, go back to not show your results, do not take any praise, do not make things exciting, make it boring, this is what you're accepting from yourself, then you're going to be able to pass a challenge. It is not easy to not be excited, to not be emotional, but you can do it. Secret number two, making a timeline and putting deadlines is going to make you fail. We cannot, and you cannot, time the market. You cannot tell the price what to do and until when it needs to do something. And this is another way in which traders ruin it all. Yes, because many people put timelines and they say, oh, by the end of this month, by the end of that month, until this date, I'm gonna make it. Until this date, I'm gonna actually pass a funded challenge. And this is how they fail. This is how they fail because they think that they know better what they're going to be doing than the price. They want to time the price, they want to time the market. And this is not how we trade. We do not time the market. We do not think that we know until what date we're going to be passing the challenge. And so, guys, I advise you to not have a timeline, to not put any deadline, but to plan your agenda, the times in which you're going to be trading. To plan time in your agenda to also be backtesting and demo trading so that you're really setting up yourself for success. When you make a timeline and you put deadlines, that's going to make you fail. What you need to do instead is concretely look at your agenda, decide when you're going to be trading, book that time, follow your routines, and do all the step by step that's necessary, the backtesting and the demo trading included, to maximize your chances to passing a trade. Secret number 3, your win rate doesn't have to be high. Yes, guys, your win rate can be as low as 40% of wins to 60% of losses. Your capacity to take a loss is what counts. And by not understanding that, this is how many traders ruin it all. Yes, guys, because your win rate doesn't have to be high. Your win rate can be actually quite low. I mean, 40% of wins is really a low win rate. But if you're able to take those losses, if you're able to work over it, if you're able to have the risk to reward stuck in your favor, for example, then you don't need to worry. You can still pass a founded challenge. And so do not stress over your losses. Take it easy, go with the flow. Focus on your winning trades. Actually, instead of focusing on your winning trades, you guys should obsess on your winning trades. And this is why many traders really fail, because they think, oh my God, I lost 3 times in a row, I lost 4 times in a row, 5 times in a row. Well, it's not important. Your win rate can be really low and you can still pass a trading challenge. Yes, because your win rate doesn't have to be high. And to show you that concretely, I want to actually show you a table. Let's look at this table for a moment. On one hand, in vertical, we have the risk to reward ratio. On the horizontal axis, we have the winning rate percentage. And so, what do you think should be your win rate percentage to pass a founded challenge? I really would like you guys to take a minute, put a pause to the video, and make this table on your own on a piece of paper and put the check marks on which win rate and which risk to reward ratio you can pass a challenge and on which one you're going to be putting next, because no, with this win rate and with this risk to reward you cannot pass a challenge. So take a moment, make this table for yourself and compile it, fill it, because I want you to compare what you have filled into this table to how this table actually looks like in real life. And only when you've done the table on your own, I want to show you how it actually looks like in real life. And here we have it. When you have a 40% win rate, meaning that 60% of the time you're actually losing, but you have a 1 to 2 risk to reward ratio, you're going to still pass a funded challenge. It's maybe going to take you a little bit longer, but you're going to still pass a funded challenge. When you have a 20% win rate, but a 1 to 5 risk to reward ratio, you're still going to pass a funded challenge. I mean, guys, how crazy is that? Let's all take a moment. Even if you just win 20% of your trades, and I know by looking at your backtesting that your percentage of wins is much, much higher, but even if it was just 20%, if you have a 1 to 5 risk to reward ratio, you could still pass on the challenge. And here is to show you guys that your win rate doesn't have to be high. Your win rate doesn't have to be high for you to be passing a trading challenge. It's more about you knowing how to manage your losses, not stressing over your losses, but taking it easy, going with the flow, and focusing on your winning trades. Yes, because your winning trades are what's gonna make it. Now, guys, consider the following. It is very important to know your stats and to understand that 3 things will play a role: your risk to reward, and your win rate. Yes, your risk to reward ratio, and your win rate. And to understand how to play a role in your profitability, I would like you to complete the following sentences. You can use your backtesting data, you can use your demo trading data. And the sentences are this. If I trade days in a month and percentage of those days are winners, I would have X amount of winning trades and Y amount of losing trades. I am risking, for example, 0.5% to make dot amount of dollars. I have this number of winning days, which equal to this amount of money. I have this amount of losing days, which equal to this amount of money. And with a monthly net of, if you take your backtesting results and if you take your demo trading live markets results, you're going to notice that with the slightest changes can have a very big impact on your profitability and on your ability to pass a funded challenge. So guys, this is everything you need to know to actually be passing a funded challenge. These are the 3 secrets that can really completely unlock your potential. But before giving you further suggestion, there is one thing that I didn't want to write down, but that I really want to convey to you. And that is, you got this. You have everything in place now. You know your trading days, you know your agenda, you know how to be trading, you know your strategy, you know your risk settings, you know how to backtest, you know how to demo trade. Most of all, your psychology and your emotions are on point. You know what are your routines and what are your trading routines should be. So you got it all. You know how to be approaching the challenge. And even more than that, I know that you're ready. I know that you're ready because you've done the work. Now, if something happens and for whatever reason you still need further suggestions to actually improve your trading to pass a funded challenge, I want to give you some suggestions. But I want to highlight you got this, okay? If for whatever reason you're not profitable enough to pass a funded challenge, there are some things that you can consider changing, okay? And those things that you can consider changing are not my suggestions of things that you should be changing. These are just to tell you that even if you're not profitable enough to pass a funded challenge, which I truly believe you are, and you got all of the guns in your arsenal to be doing it easily, if something happens at any point in time, you can still recur and go back to these, which are backtesting a longer time frame to understand why you're not being profitable enough, analyzing your losing trades and improving on them, actually obsessing over your losing trades, changing your setups and so changing your risk percentage, taking more trades, trading more than one forex pair or one index, increasing your trading time, adding another strategy to your trading plan. For example, to the mentorship 2022 strategy, you can add the thank God it's Friday strategy. Guys, you're made to be profitable. Your desires are there in your heart because they are meant to be fulfilled. Yes, guys, because I mean, you know, right? There are so many traders out there on any different social platform that are showing you how to pass a prop firm challenge, how to keep up the money after passing the prop firm challenge, and so on and so forth. And I know personally quite a few traders that have passed the prop firm challenge, have learned a lot, and then have lost after that they had their own trading account. So maybe they have 100K, $100,000 to trade. They pass the prop firm challenge, and then in the first month or two, they actually lost that account again. I mean, how is that possible, right? Well, guys, something that you need to know and that you really need to remember, and please rewatch this part of the video before taking the prop firm challenge, is that it's a mind game. What prop firm wants from us is that we are boring, we are predictable, we're making profits, and we do not get swayed by whatever happens in the market, in the news, throughout an entire month or 2 or 3 months of a challenge. And so that when they give the money to us, they can trust that we are, in a boring way, gonna deliver them profit as well and take some profits for ourselves. And you know, they're right. If I were to give any of you 100k to be trading right now, I want to know and I want to give you the money to the person that is trading in the most boring way, that is first and foremost conserving the capital, and secondly making slowly and easily profits, and that it's making it in a repeatable way, so that it's like just doing it, profits, 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 all loss, okay, profits, profits, profits. Because I want a return on my investment, and they're absolutely right to request and ask that from us as well. What's also mind blowing and that you really need to remember is that, guys, have you noticed? And I'm going to pop up here a screenshot. This is what a famous prop firm challenge asks you to do to pass the different phases of the challenge. And so, for example, this prop firm company, they're going to give you 10k to trade. You're going to have to pay X amount of dollars to be actually doing first demo trading with this money. And then if you pass the first part of the challenge and the second part of the challenge, you're going to have access to that money and you're going to be able to actually trade live, make profits, and get some of those profits for yourself. Now, you can see here that there are two phases of this challenge. In phase one, they require you to bring home 8% in profits on 10k. In phase 2, they require you, for example, to do 5% in profits on these 10k again. And so they're asking you, please, can you be so boring making your profits that you can do it repeatable once and then twice? And then we're going to give you the money. We will trust you, we give you the money. And to do that, you pay X amount of dollars. Awesome, amazing. Now, let's look at the $100,000 challenge with the same company. Again, there is phase 1 and phase 2. You pay a little bit more to have access to that money. But did you notice one thing? The percentage that they're requiring you to actually be doing and be making is the same. The percentage is the same. And so once you have done actually a prop firm challenge for 5k or for 10k and you have passed the challenge, guys, it's like the same as you have passed the $100,000 challenge and the $300,000 challenge or the $500,000 challenge. And that for me is just like mind blowing, guys, because many traders, they make the $10,000 challenge and that's amazing, and then they try to do the $100,000 challenge or the $300,000 challenge and they cannot pass those challenges, and I'm always like, wait, why? It's exactly the same. What's required from you, what you need to do is exactly the same. Do you want to know why? Because their little devil tells them, okay, now that you're doing this big amount of money, because for so many people $100,000 are $300,000 are unthinkable amounts of money for many people. But actually, if you were able to do it on a 5k account, on a 10k account, you can easily do it on a 300k account because you have everything that it takes to pass any other type of challenges in trading and in life. And so guys, the secret that profitable professional traders have understood is that when they have a strategy and they're able to repeat it and constantly do it, following their step by step, checking their emotions, being at their best when they trade and when they're taking decisions, the amount of money on which they are trading is not important. It can be $500 and an account of 500, it can be 5,000, it can be 10,000, it can be $300,000 that they're trading on. They're still gonna make money because the amount of money, the profits are not important. It's all about your step by step, your psychology and your emotions. And on repeating the same boring process over and over again. What would it take for you to actually pass a prop firm challenge? Which type of identity would you have to pass a prop firm challenge? Why, guys, is it so easy for you to trade right now? I truly believe that the answer for many of you is because the mastery have gave you the background, knowledge, information, and also training to get to know yourself better, to be able to expand as a trader, expand as a person, and be able to do things that are a little bit more complex, such as trading. I know, guys, that you're ready. Okay, guys, isn't that amazing or what? You can still have a 40 or 50% winning rate, and so like half of the times you're losing, half of the times you're winning trades, and still pass a prop firm challenge and still be a profitable trader. It's all about not only taking winning trades, sometimes it's about taking losing trades as well, but it's about how we deal with all of that, how we deal with the ups and the downs of this industry, how we deal with the ups and the downs of this job. In no other jobs, nowhere in the world, you sometimes are required to have losses. In trading, sometimes, once in a while, not too often, you're required to have losses, and you will have losses. And so just learn as much as you can from your losses and then move on. Having a loss on a prop firm challenge will not make you unprofitable. Having 2, 3, 4 losses, still the same. What you need to do and what you need to focus on is the step by step. It's on the process. It's on executing your strategy. It's on taking a break when you need it, backtesting, demo trading, gaining back your confidence, and using these tools to feel great and to master every single minutia that you still maybe haven't mastered yet, and then moving into making real profits. I know, guys, that throughout this mastery, your perception of yourself, your way of executing trades, your routines in trading have changed. I know that you have started to become much more conscious about everything that the trading industry is throwing at us. Nothing that happens outside of us is important. What happens inside of us and how we deal with ourselves and with our emotions when we are in front of the charts is what's going to make it or break it for you. I want to thank you. I want to thank you from the bottom of my heart to have had faith in me to enroll in this mastery, to trust me with sharing, with showing up every day, and with doing the necessary work to become an amazing, profitable trader. I'm really looking forward to keep growing with you in this journey. Thank you so much, guys. Keep up, go for it, do not stop. This is the way.